and welcome to Money Control. Well, I guess everybody has been glued to the screens watching the news. Since last night, we've seen some kind of escalation in the India-Pakistan conflict situation. The markets have reacted as we speak. The Nifty 50 is down about 1%, slightly more than 1%. There has been slightly bigger cuts in mid caps and small cap stocks. What comes next? Is this muted reaction justified? Is the market really becoming complacent, or is this something investors should see as done and dusted? How do things look from here? I have a special guest today, Sandeep Tandon from Quant Mutual Fund. Sandeep, thank you so much for joining this morning.
Yeah, thanks for inviting us.
So, Sandeep, first question, are you surprised by the market reaction? Do you think this is normal reaction? This is muted? Are the markets becoming complacent? Or is this something that needs to be shrugged off anyway?
So I think it's a very mature reaction, okay? And in the heart, everybody is very happy and celebrating that our forces have defended it quite well. In fact, since I come from army background area, I have been born and grown in army area, so I have a lot of friends in that space. So we're talking to people in the night, and say people who have seen 1965 or 71 battle, and this is the first time, I'm talking about people staying in Jammu. So, this is the first time they talked about our army has defended us, these attacks so well, and we should be very proud of what capability I think the current government has built in last many years. And that is the reason we are able to defend. So I think even this is what I said one of the other channels also. From a longer term perspective, in FIs are watching how this country has been evolved, from a weak on multiple front we have lost, and we lost our land in last maybe in a few decades back. Now look at today, India is very different. India is fighting on the front foot and equally aggressive. So I think it's a constructive thing, very positive message from long term that we can defend our territories. After Israel, whatever we have seen, how well they have managed their geopolitical situation, or even the casual, regular attacks which happen on Israel. I think we are the first time seeing in India, and I'm pretty happy the way our forces are defended. And I think this is a very strong message for the domestic investor as well as global investor that India is safe. No major damage can happen. And you have to understand that we are living in a high geopolitical volatility environment. It's not only about India. Globally, the geopolitical volatility is high. We are seeing some sort of civil war happening in various parts of the world. We are seeing border issues with various countries. And we have to live with that. This is the new way of living. You have to live with these escalations sometime. And life goes on.
Right. True that, Sandeep, I guess as citizens of the country, of course, everybody is in a celebratory kind of mood. But tell me from a market point of view, what are the various scenarios? Of course, this sort of a situation is always extremely unpredictable at this point in time. Even as we speak, it's very hard to tell what comes next in terms of events. But how would you sort of build scenarios, and can you build some scenarios in terms of what should be the market reaction given the various possibilities in terms of escalation?
So I think
because the one thing I think that has been very strongly said in the past few days, especially just after the attack in April itself, is that history tells us that these things are, the day you go into war is the day the market bottoms out, and thereon it's actually a rally. So that message has definitely gone out very clearly to a lot of investors. We've also written about it. But every time, as we know, is always different, right? The market levels are different, the perceptions are different, the valuations are different, the outcomes could also be different. So in your mind, how do you lay out the various scenarios? And based on that, what could be the possible outcomes?
So I think the way if I look at purely from the economic or business perspective, look at just one day prior to this attack, we signed a deal with FTA, with the UK government. So, and similarly, India is way ahead in terms of bilateral discussion happening with the US also, and so is the case with the European Union also. We are pretty advanced stages. So I will say it's a maturity of the current government that on one side they are handling the terrorism and the border issue. Other size business is normal as it could be. And in fact, rather, they are putting serious efforts to sort out the differences with US and in fact, I will say in today's context, it's a great opportunity for India. In fact, our last fact sheet I have written about this is bad for US and China. It is not that bad for emerging market and is good for India. So if you have to really look at from a relative basis, because we ultimately money shift on a relative basis opportunity. And in last few years, we have seen extraordinary cross-border build-up happening in terms of flows were there extraordinary in the US market. And I think the way US market has corrected and the tariff-related concerns have come up, which means even long-term investor like Europe and Japan have started withdrawing money from US. Okay, and so is the case with many Saudi family office. So ultimately, where this money will go? I always said that if I have to talk about our money flow analytics thesis, money shift from high risk to low risk environment. And if I have to look at in today's context in January 2025, the developed market risk appetite was high and liquidity started shrinking. And where the emerging market risk appetite is on the lower side and liquidity was just marginal rise we have seen. So it's a deadly combination which clearly endorses that money will shift from US to emerging markets, particularly like India. And I always said in earlier also that 2025, the decoupling process will start because we were linking with the dollar index spike and we said dollar index should peak out in 2025 and start getting devalued over a period of time and maybe losing its relevance also in next few decades perspective. So that was our thesis. And the last fact sheet we have already indicated that decoupling process has already begun with US. So I think net, if I have to look at, is a very constructive background for India, where the same foreigner who have been seller for last 2 years or last many quarters are they coming back because it's a relative opportunity. They are getting exhausted or tired from the US market. Returns are turning negative from the beginning of the year, and they are seeing some sight of complacency or euphoria in the US market. And obviously, money is shifting. So India is by default the huge beneficiary. It's not like that India has corrected significantly. So same FI who were think who sold earlier now think India is very attractive and very a correct valuation. I think it's a relative game where we are seeing perceived safety is far higher in India as compared to any emerging market and as compared to any developed market. So with that background, money is bound to shift to India. So I'm not getting into a knee-jerk reaction. Today is 1% down, or maybe it can correct another 2%. I think these are the great opportunity to buy. And if you look at the same FI who was seller, they have started participating for last 15 20 days. So I think domestic mutual funds are buyer. They're actually sitting on a lot of cash, so they can also participate. Institutional investors have family office have sold, retail has also sold. So and the FIs are buyer which have been a seller. So I think the combination is quite good. And you look at the leverage position on the lower side. Okay, the perception is completely subdued sort of thing. India is no more buy on dips, is sell on rise sort of thing, and with this Indo border tension apart from tariff, people are concerned when as a student of behavior finance, we see these as a buying opportunity. We are not getting capitulating and giving up. We are not making statement, let's wait, let's just settle down. We will participate. I think we as a student of adaptive asset allocation, we try to adapt what is prevailing in global markets. And this, if I have to look at from putting a lot of data put together, I think everything is endorsing India is on a relative basis, very comfortable situation. So we should park your money. And this is what is happening. So I am very constructive. I'm not saying that I'm excited. This is a massive risk on. In fact, in last letter also we talked about last 2 months, like 3 months, we have been saying India is a mild risk on and it's a proper risk on now. And globally it is risk off. So is every data point is constructive and supportive. Why should I be so negative? Because small, and I think this Indo-border tension, which is the Indo-Pak tension, which is going on, I think government is handling very well. Army is handling we should teach them a lesson because this has been a few decades problem. It has to be settled from a longer term perspective. I don't think we have a permanent solution for this, but at least we have to break. Okay. And I don't know to what extent our army will go, but we as a country, we're fully supportive, fully cooperative. I think they are doing their responsibility, their duties. And as a market participants, I think we also have some duty What is first duty? A, don't get panic. Don't spread around narratives what is happening. It's a great buying opportunity for retail investor and as a mature mutual fund house. We will recommend all our investor not to panic. Rather, in fact, increase your holdings in the mutual fund or through secondary market. It's a great opportunity. This is what we can do as a market participant. We are willing
Sure.
to support. So that is not a patriotic
Sandeep,
reasoning, but it's a logical reasoning.
Right. Sandeep, like I asked, I mean, what is the best and worst case you envisage from here? I mean, what could be the best case? Of course, you're saying, foreign investors are queuing up, which is true because in the last, I think, 16 sessions, they've already bought about $5 billion. I had 2 points to make to, this conversation, this view that is coming across from almost a lot of people that foreign investors, will look at India favorably. If anything, for example, last week we had the Buffett's Berkshire annual meeting. They have put in big amount of money in Japan. So when we talk about, the tariff situation affecting both US and China, the natural contender to that, take that money away, seems to be Japan and Europe than emerging markets, which is disappointed for the past 20 years. So my counter question to that is, why do we believe that this $5 billion, of course, some people are saying that, passive money is not getting allocated to India because we've not seen extra ETF creations, etc. in the past 10-15 days. What you have seen is active allocation shift, which is a tactical allocation, and it might therefore not continue. So how would you counter that? That is question number one. Second thing is, how do you see the best and worst case scenario? What could happen if, this sort of, this week we don't see any further escalation? In some way, Pakistan sort of also gets to sort of claim some sort of a victory and they exit out of this and things cool down from Monday onwards. That's the best case scenario. And worst case, of course, we don't know what the worst case scenario could be, a full-blown war. How do you see these two situations and the odds of such things playing out?
Okay. See, first of all, Mahalakshmi, I will say, if I go back in the history, majority of the time, global analysts and strategists are always wrong. Okay. So you look at, let's talk about 2025. Since we are a student of behavior finance, I always look at these data points. Beginning 2025, everybody was very bullish on US. Everybody was very equally bullish on the dollar index, and they were all concerned for emerging market. Okay. And you look at today, US has corrected the maximum within the currency, dollar has depreciated the maximum, and nothing much has happened in the emerging market from January to March. Minor correction here and there, and maybe at least India has also recovered significantly. Currencies of the emerging market currencies also recovered. You leave 1 or 2 days reaction which is happening on the Indian yields and the USD INR pair, because it's bound to happen when such news are there. But if I look at from a medium term perspective also, it's quite constructive. And that's what I said. If money shifts out, see, this game is all about money flow. If money moves from US
Right.
to emerging market, the 10-15% money shift from US, there will be tsunami out here. So you can understand the India and other emerging market does not have that appetite to digest this sort of flow as compared to the developed market.
Right.
And I don't think money is going towards Europe. Yes, Japan has been value in thesis for a while, and I think it will continue from a medium term perspective or longer term perspective also. So we are also saying that as long the currency remain weak, and this thesis will continue. But if I have to look at this specific thing, and I say, and I'm not making any comments on the strategies, what I'm trying to say, where the consensus get built. And it's not about taking a contra call
Right.
also, it's a data driven call we take. So we are clearly endorsing this year is all about emerging market. It's not about, and we have to live with this extraordinary geopolitical volatility. In the beginning of the year, we talked about, don't look at equity market. You will not get answers. Look at the yields and currency market and maybe global vol indices. You will get better answer how to work out your strategy and how do you manage this current situation also.
Right. So the best and worst scenarios. based on the
So, yeah,
event?
to be very candid with you, Mahalakshmi, this is a very theoretical exercise. But if I have to say the best case scenario, maybe we can retest 25,000 mark because market is very light. And if you see any news on this escalation on this side and how you got a UK US deal getting signed, if something gets settled with US India also, and between India and US, that could trigger that could be a good scenario. Worst case scenario, we can correct and consolidate. Okay, I am not in a camp who believes that extraordinary fall can happen. See, fall only happens when people are complacent. You have extraordinary leverage position. People are euphoric. They are very complacent about what is happening, which is not the case. If mutual fund industry, if I look at the LRR report, we're talking about couple of mutual funds sitting on more than 20% cash. Some of bigger numbers putting out 8, 9, 10% cash. If the cash levels are so meaningful, okay, leverage positions are extraordinarily low, okay, the mindset and sentiments are so negative, how can market correct with this background? That's a very simple data analytics. If I have to put it as a student of data science, I will say the background is constructive. Maybe look at what people were talking about 1,000 point down in the morning. Okay, what is 1%? Even the small
Right.
and mid is around 1%. Small is 0.85. Hardly any. In the normal days, you see such reactions. So I think our market has become very mature. This is, I always say, the retail investor is for the first time I'm seeing in last few years, they have changed. We used to make fun of retail investor. They virtually come at the peak of the cycle. Now every dip they have been buyer. So I'm very constructive in terms of
Right.
the way behavior characteristic of market has changed. Both the breadth and the depth of the Indian capital market has actually increased.
Right, right. So, Sandeep, you said you are a buyer in the market right now. You're constructive. So,
Yeah.
where do you see those opportunities? What are you buying?
So the beginning of 2025, when this Trump-related thing started, we have skewed our portfolio towards India-centric companies or India-centric stocks. And if I have to talk about, like we are more skewed towards hospitality as a space, we are more skewed towards infra. We continues to remain extraordinarily bullish as a decadal call for the power sector. Then we are equally constructive on the consumption. But again, you have to be very choosy out there because nothing is very cheap in that space. Apart from these, what do you call it, local economy driven sector or stocks, I am equally constructive on the pharma space and particularly on the generic side. US generic, okay, because there is no substitute for generic drugs globally. Okay, so whether it's Europe, whether it's US, our generic companies bound to will grow irrespective whether you put 10-20% tariff. I think that can be easily paid. So that's another area, pharmaceutical, where we are very bullish as compared to street where people are slightly in a panic mode. They are not very clear what is happening. But I always look what is the substitute. You can live without not buying a car for 2 or 3 years. You can live not buying clothes for maybe 6 months to 12 months. Can you live without buying a proper medicine, not even for 2 hours? So we have to understand the compulsions of US also. In the COVID also, if you look at when the crisis hit us, India was the biggest beneficiary on because we are the drug supplier to the world. So we are in a very monopolistic situation. And if you are in a monopolistic situation, why will not capitalize on that opportunity? This is a brilliant opportunity to pursue. We have loaded many such names which in our portfolio.
Okay. And where do you hold your view on banks? Because now private sector banks have really made a comeback, sharp rally, at least in this phase of the rebound, which has been very sharp, is largely led by banks. Where do you stand on
Yeah.
banks?
See, we have not played through banks. In fact, we have our own thesis of P multiple getting deteriorated of the private sector banks also. Globally is already deteriorated. It's a question of time will happen in India. And yes, I agree. Participation was there. That's one of the reason I think this is a sector which is grossly overowned. Okay. And if you ask me if the profit booking can come in any space, it will be the banking because the bank sector index made all time high last week itself. So I
Right.
think if somebody has to book profit, this is the area they will book profit because this is the extraordinary gain we have seen in last 1.5 months or so. So I'm not negative, but I'm not very excited about this space.
Okay, that is because of you think the multiples are higher compared to what the growth
Yeah,
that they can
because
deliver.
this whole industry works on the earning. People forecast earnings. Okay, what will be the next year or 3 years or 5 years earning forecast, which is again based on certain assumptions. So anything which is based on assumption doesn't work. That's the reason you always have positive or negative surprise. But we as a house specializing in behavior finance, we always work on a perception analytics. How perception, which is a reflection in some manner, with the help of perception analytics, we are decoding or quantifying the potential multiple change, okay, or the both in absolute and relative basis. And we are seeing the perception is speaking out, and hence we are cautious, which means multiple are also peaking out. They have potential to correct significantly. Anything which is an admired territory of perception, we tend to avoid, and anything which is a neglected territory or the most hated zone, we are buying those names.
Understood. So again, where do you stand on textiles? Because the narrative has been very strong. Last 2-3 days, you've seen 15-20% move on some of the stocks like Gokuldas Exports, Wellspun, and so on. Are the markets running ahead, or is this something that is bound to happen?
So we are equally constructive on the textile space also, both from US perspective as well as Europe, because of this FTA. At least we are, as compared to Bangladesh, we are in a better position. Or so is the case with Vietnam also. And if US treaty also gets settled, I think Indian textile company will be huge beneficiary. So we are very constructive. The only problem is that the size of the what we call it sector is too small. So you can't have a very skewed portfolio because liquidity issues are there. But we do have overweighted state, and we still like these names.
Okay. And what about defense? Because there is a lot of talk around defense. Of course, it was a very powerful theme. It went through its own cycle, went through a very deep correction, and now most of the stocks have also come back. And there is also some hush rumors around, government talking to some Indian companies about ramping up capacities and so on. Where do you stand on these stocks? Some of the big ones like HAL, etc., Bharat Forge, L&T. I mean, how do you play this sector, if at all?
So the way I look at, if I have to look at pure defense play, okay, they have seen good run in last few years. And as a house, we have been
Right.
very positive in the PSU space, and we were equally gung about defense also. But in last few months, we are not added any position. Rather, we have cut down and moved towards other space like OMC or infra or some other sector oil companies, purely from the valuation perspective, because we feel a lot of things has already been priced in, is there in the prices. Whether we will make extraordinary money from the current level, we have our own doubts, and that's the reason I'm not negative on the defense sector, but I'm seeing valuations are relatively stretched. It's a not grossly owned, fairly distributed or fairly owned stocks, and that's the reason I will prefer to buy other PSU names, like whether talk about OMCs, oil companies, select power companies. Those are the areas where I think valuations are very attractive, under ownership is there, and some of these names will actually trade in the hated zone. So it's a good opportunity to shift and participate. See, this business which we are in, it's not about we like it or don't like it. We like defense name and it's a great potential from long-term perspective. But as a money manager, I look
Right.
at what is my risk-adjusted returns. So my risk-adjusted return, maybe in other PSUs are superior than this. That's our thesis, our model of predictive analytics thesis endorses.
Sure, fair enough. Just one last question. What about some of the stocks like, Paytm, Zomato? I mean, for many of these companies, the narrative seems to be shifting. For example, Paytm saw a steep rise now because, the narrative now is, at least the story now is that the path to profitability is clear. They might sort of hit within the next 1 year. They could see see profits in their books. Similarly, Zomato has been a bit of a disappointment. So how do you navigate these stocks?
See, as a house, we have taken a very cautious approach toward these new age company. Even when they get listed, we never participated because they came with extraordinary hype, and we don't like anything which is in the hype or most admired territory. Hardly any cash flows, their own challenges. But yes, some of the companies we also admire and they are on the right track. But in general, I'm still very cautious on these names because I have one our own thesis, what our predictive analytics model talks about. Anything which was in the admired territory in last 2 3 years, all those names has potential of significant underperformance going ahead. With that background, I will like to avoid these names, and hence I'm not negative on the opportunity, but it doesn't fit into our
Right.
risk adjusted
On the
return
stocks.
thesis. Yeah.
Right. And from the levels we are sitting today, Sandeep, what is the worst downside you will predict?
I think I'm not a guy with a very specific numbers in mind.
10.
We are not very good in forecasting absolute numbers. What we are good in identifying the inflection points. Okay, extreme inflection points. We are buyer or sellers. But right now, market is neither on the extreme inflection point on the long side or on the short side. So I think it's somewhere in between. So I will not like to take a very aggressive view on either side, and hence I will play stock specific move. And once we, as a macro house, we are saying that India is a risk on, global is a risk off, then with that net we are constructive. So I will be more long bias rather than the short bias view, and I have a more constructive. I think something like this is a phenomenal opportunity to participate, and this is my recommendation for all the investors and all your listener also. This is a time not to get panic, not to get into or try to see so many narratives which is floating in the social media or the media in general. I think let's remain calm. Government is doing whatever they have to do. Armed forces is doing what they have to do. We have to do a bit on our side by not panicking and just gradually maintaining a discipline of SIP and continue to remain invested in India. That's a very simple message.
Fair enough. And just to conclude, I'm presuming you are fully invested right now, or do you have any cash at all?
No, see, as a house, we always have 5 6% cash. Okay, in a good market, bad market, because we keep that much cash as an
That is for your
opportunist
usual
point of
redemption.
view. Yeah, whenever not from the
Okay.
redemption point, we're not facing redemption. A is a psychological comfort, but B is more from a opportunity. Let's say today market is down, could have opened 5% down. We could have bought with both hands. Okay. If I don't have cash, I
Right,
will not
right.
able to participate. So what we do at every level market moves up, we tend to book some profit and keep on generating that cash to up to. So it's not about such crisis in the market. You do get some opportunity. Some stock will be open 5% down, 10% down. Okay, those are the opportunity. If we like, we tend to participate. We don't have very large cash in
Understood.
the same, except mid and small, which we have been cautious for a while. But in the large cap and thematic fund, we are largely invested, except for 5%, 6%. Anyway, we maintain.
Sure, sure. All right. Thank you so much, Sandeep. It was an absolute pleasure talking to you. Thank you so much.
Yeah, thanks for inviting Mahalakshmi. Thanks.
Sure. Thank you so much for watching this show. Stay tuned to Money Control for news, views, and market updates.